What up, what up, what up?
Well, hello, everyone. We are back on live from our studio at the 5ers.
Except for
How is
Jonathan. Jonathan is still not here.
Jonathan is not available today, but but don't worry, guys. How is everyone at home before we continue? Before we start, how are you doing, Alex? You seem well rested.
But you know what? I am very well rested. Thank you very much. That is true. I am. No, it was a nice trade yesterday though on EU, wasn't it?
It
That hit,
was, yes,
yeah, it hit take profit while after the stream ended. That was, and it actually pushed even further afterwards as well. So it was.
it did.
I know this guy definitely was trading as well. Vinicius, God, forgive me for that botching of your name, but we were all trading EU, and there was some really, really, really nice trades yesterday. So
Yeah, it was very nice. We have an exciting show today for everyone. Stream. We have someone special in the background waiting
wait,
to
before you do
to.
it, before you announce it, let me get the effect, the what do you call it, the announcement effect, I guess it is.
Okay.
So when you announce it, I'll do the it's time effect. Okay.
All right. All right. I will. You're ready. I'm gonna. We have this.
Haven't used it in
Yes,
quite a long
it's time. We have a special guest for you guys today. No other than Anastasia joining us today. Let's bring Anastasia on. Hello, Anastasia. How are you doing today?
Hey guys, I'm amazing. I'm doing fantastic. Good to see both of you and everyone who's joining us today on the live.
Yeah.
Oh, yes. Well, we are glad you're joining us because last couple of times you joined, you shared some very good insights into how you approach the market. All those volume indicators and approaches, we love them. And especially everyone in the audience, we had very good response. People were very engaging and interested in everything you had to share. So, yes, we are thrilled to have you with us. So good stuff.
Be with you here, guys. Thank you so much.
Isn't this going to be a regular? I hear from somebody this is going to be a regular thing as well.
Yes, it will be. Now I'm gonna be live for now every single Wednesday.
Yeah, look at you,
excited for
lucky people.
Nice, nice. That is what we want to hear because we appreciate you and the audience love you. So we are glad to expand our stream with your presence, with your weekly presence.
Thank you so much. Thank you. I'm really excited for that as well. And I'm happy to see people also being happy about this, So I'm pretty sure we can bring some amazing things to them also in terms of education, ideas, macro, and also just help them to become better traders overall on different levels as well.
Exactly. That's our goal here. We are focused, as we always say, focus on the growth of the trader. So we share everything we can, educational, market analysis, approaches, everything we can to help you become a better trader. And of course, that is because we are a prop firm offering you the best conditions to be a trader, right? You can trade our capital and keep the profits.
Yeah.
And this is why I'm excited to be a part of the team because, you are not only focused on funding traders, but actually helping them to get there and actually keep it, because getting funded
Yes.
is one thing, but being able to keep it, that's a completely different story.
Do you know what? I say this so much. It really isn't hard to actually make money in trading. The hardest thing is actually keeping the money that you've got. And that's the difficult part, is not messing up while you're waiting to get into a trade.
Completely, yeah.
That is so true. And it goes to show how difficult it is to be a consistent trader, right? Everyone can put on a trade, and just by the sheer luck of things, you will, in a number of times you will be lucky and even pass those challenges. But to keep doing that consistently, week in, week out, month in, month out, you got to have some really high level skill to do that, and it's not easy. That's the secret.
What's the game plan for today then? Because we got inflation coming up. Inflation rates for the US.
Yes.
So the market isn't really doing anything until then. So what is the game plan?
All right. So Anastasiia, where are you preparing to put any positions on? Are you waiting for these numbers to come out before you approach the market, or is it, something you're aware of, but it's not an input for your trade plan?
Let's say it like this. I have the position running from yesterday, actually, after the PPI already hit. And it's already break-even, so I'm not placing anything new right before the CPI. Because we have quite volatile times as well now, right? We have inauguration in literally 5 days from now. The market is really overheated, waiting for the Trump to take the presidential space as well. And everything about the tariffs that are most likely not gonna keep us waiting for them long after he takes actually the presidential spot. So everyone is waiting for that, and the market is quite volatile as well, So we are on the edge as well. European market has been already preparing, and euro has been losing a lot of value before that. So I'm actually very interested to see what's going to happen, because everyone is afraid of what Trump is about to bring. But realistically, if you look at this previous presidential term, he's a really good businessman. However you turn it, you can say a lot of things about the man, but he's a very smart businessman. And last time when he became a president, the market was really prosperous. And honestly, it was the best time, as for my personal opinion, for traders. Really fun times. So definitely. I'm not placing any trades right now, but I can share the idea that I had yesterday as well, and it's running currently.
Go for it. Let's have a look.
I'm gonna 1 second.
Let me share my screen as well, so we got it open just in case anything happens.
Yeah, it is in 20 minutes, right? Yes.
Yeah, it's
20 minutes.
Yeah. When you're ready, Anastasiia. Okay, there you go.
So I'm still leading the USD CAD trade, and also I'm expecting it to continue depending on the numbers that come out, because the PPI yesterday broke the trend a little bit after continuously going up, and after the highest number in November 2024 as well. So December was a little bit lower, and that started to send our USD a little lower than it's been for a while. Now I'm expecting potentially, if the CPI follows the PPI tendency yesterday, to see USD cut a little bit lower as well, and then potentially the reversal back from 143.1, and the main zone where I'm going to be looking for the buy continuation is going to be 142.6 to 142.2. Now why? Well, because if you look at it from the bigger perspective, why I was looking for this yesterday, well, first of all, because of this PPI, but secondly, because we had quite a huge volume accumulation here for past weeks already, waiting for Trump's inauguration, and waiting for also the Fed's policy concerning Trump as well, and concerning their unemployment rates and the CPI as well that is going to come out. So the price went below this volume accumulation area, and I was expecting the price to reverse here, but was waiting for some extra confirmation. So when PPI yesterday came out, it was just extra sign that sent the price lower before then correction on this PPI, and then I'm expecting the continuation at least towards 4300, 4300 level. Now, here is potential zone where I'm going to be buying it again, because, well, the tendency keeps up for now. And if Trump brings the tariffs that he's talking about, which most likely he will, right? And it's pretty serious about that. I don't think we're going to break the tendency of US dollars gaining value also. It's going to also add up pressure on the inflationary side. And this is the first high volume node from the last impulsive move to the upside. So this is essentially where the volumes were accumulated. But also, if you go back, a little bit to the, let me shift to the daily time frame, it's going to be better. Now we will see that this is also the previous zone where the price in 2020 during the COVID was rejecting for USD cut. So that's quite interesting as well that it combines. 1 second, sorry guys, it's for some reason my trading queue is letting me down. Here we go. So that was the highs for the 2020s, and this exactly, right? And this is another highs for 2020 as a volume zone here. So this is exactly the volume zones that I'm looking at right now for the price to return towards. So depending on how the CPI comes out, either it's going to kick me out in a little bit profit or in much profit if it continues further. But besides the USD cut, right, besides the US market in general, have you guys looked at the GBP USD and everything what is happening in UK now?
Yeah, well, to be fair, I was actually long this morning on pound because it is
nice.
That's pushed down quite a lot, and I'm just looking for a little bit of a breath of the pound. You know, lots of traders taking profits, and I'm just looking for maybe a long on the pound. But yeah, the UK is a mess. And I'm British, so I can say the UK is absolutely trash at the moment. But we can see what happens. I'm looking for a longs on pound dollar, depending on what comes out in a short while. What's that? That's on the hourly time frame.
Yeah.
Yeah.
What time frame are you looking at?
Yeah, so I'll be looking. So if I pull up my my chart, I can show you. Let me put this up. Show the type of trade that I'll be looking for. So we can see a lot of air around this area. On the higher time frames on the daily, we can see we've had quite a lot of buying pressure. We've come into an area of demand. We've had like that pin bar, and the pound is bearish. There's no question about it. Everything that's going on in the UK, it's super bad. The government is, you know, you're gonna get me on a tangent on the government soon. But all I'm looking for is a little bit of a retest into an area before there is potentially another leg down, and I'm only looking for a small move. So you can see we found some demand over in this area right here. So going on to the lower time frames like the hour, I can kind of see that price is not breaking down. We've had this nice wick from the morning. We've had a break above these of these highs, a retest on the EMAs. EMAs are colliding together. All I'm looking for is that break, retest, and continuation trade all the way to the 200 EMA on the 1 hour. And that's exactly the same trade that we did on euro yesterday. It hasn't happened on pound yet. So that's why I'm looking at doing it on the pound. If we have a look at what happened yesterday, this is on the 1 hour on euro. That literally is what happened. So we had it coming into an area of demand, price pushed up, consolidated, broke up above the consolidation, straight to the 200 EMA on the 1 hour. Same play on the pound. Just let's see what happens with this news, though, to be fair.
What's your TP on pound? Because I'm waiting for a sell, to be fair, at 22.8/2300.
Yeah, I can see. I can definitely through this area here. You're looking through.
Yeah.
Yeah.
This is where the AMA is. Yeah.
100%. Yeah, I can definitely see why you would want to get into a short there, and that's definitely the reason why I would want to get out of my long there. You know, I'm really bad at picking big moves, but the little scraps of like those little retests, that's my bread and butter. You know, so we'll wait and see what happens. But this is pretty much the same type of character of what happened with euro yesterday, and let's just wait and see what happens in the news, and we can take a trade then in front of everybody and see what happens.
Yeah, I think both of them are offering quite nice opportunities, GU and EU, because if you well, let me show my screen first. We mentioned this yesterday. We had this nice pin bar created on the daily time frame, and what happened next? We had nice follow through the next day, which was yesterday, of course, and it's held quite nicely after that. Meaning, if price by any, if and when it gets here, by here I mean that order block that was created by that pin bar, or that engulfing, I should say, gets retested, right? Although that's for that to happen, it needs to go down first, right? Quite considerably if you're in the intraday time frame. But to me, that's where the value is, when price comes back to a place where the buyers already signaled that they wanted to be buying the market. And if you compare that to GU, you have a very similar. Actually, if you go to the higher time frames, you can see that we are on the daily time frames. If we zoom out, you can see that we also have a quasi which we are tapping into. And what does it do after we tap into that quasi, that entry order block on the daily time frame? It signals with an engulfing, meaning we have a daily quasi at play, which signaled to us that this could be a great place to start getting in. Now, I don't trade the daily solely, so I need to shift down and go to the lower time frames, but that could be the beginning. And that's the same thing with Euro. Both of them are basically doing on the higher time frames the same.
Is it my internet?
Yeah, I thought I'd just wait to see if it's me or if
it's one stronger than
today.
GU. But if we go to the H4, I can find, and my trading view is comes back. We can, oh, there we go. All right, so no, I got it there. All right, so we can you can see we is it?
We've lost him. Yeah, we've lost Victor.
We've
All
lost.
right, can you hear me?
Yeah, now we can.
Yeah, no, we can hear you. Yeah.
Oh,
You're
you
back.
lost me.
No, we got you now.
Am I back? Okay.
Yeah.
All right. Okay. So what was the last thing you guys heard?
It was kind of a bit all over the place because it was. Yeah. Do you want to start again from the order block, from the quasi and the order block?
All right, no problem. What I was saying was that GU and EU, well, it's because of course it's the dollar that's moving, right? GU and EU both are switching, at least on the daily time frame. We are getting those buyers, those structures, bullish structures being formed on GU. That is that nice pin bar that we had was formed on Monday, and we had. Yesterday it closed as an engulfing, and today that wick down is very nice for a retest of an order block to be traded, right? And that's what I'm looking for. So on the daily time frame, it looks very interesting for a long. And also, if we zoom out, we can notice that where we are right now is price tapped into a daily entry order block on the quasi on a much bigger structures, where the neckline was taken out. That was the neckline on the bigger structure, and now it's coming back to one of the last order blocks where it could have some kind of a pop, at least a pop, but possibly even more than that, depending on how it develops going forward. So we have on the bigger scale and on recent price action, we can see that the buyers are getting in. So I'm very interested in that. And you can see the same thing with EU, although EU held up quite nice, much stronger than GU. So I'm looking for buyers right now after this bullish engulfing was created on both pairs. Both of them I trade. For EU on the daily time frame, in any case, if I'm going to be holding this for much longer, meaning perhaps for a swing trade, if possible, that is going to be at the daily order block. But still, because I see where we are on a macro level, on a higher time frame, on the market structure, I'm looking for buys as well, because this momentum that has started where we are, this bullish momentum can continue. So on EU and GU, there's plenty of opportunity. We can see that order block on the H4 if you zoom down from the daily, and it's still creating those bullish order blocks and retesting them. Each time it retests, that's an opportunity for us to get in, look for a reason to put a trade on the long side. So I'm looking for that long on both of them. My signal hasn't signaled yet today, but I'm definitely looking for that. And actually, to me, it would be better if when the news comes out, CPI comes out in about 6 minutes and 30 seconds, that it goes a little bit against us, against that trade, as long as it doesn't invalidate it, because giving me if it does do that, not going all the way down, but just to the the extreme of that bullish structure, that allows me to get into the trade with less attempts, right? Because if it's going to take longer to make that move, it means that I might get I might only catch the move maybe after the third or fourth time. But if it does on the news squeeze that order block, it means that it's not going if it's going to reverse, it's only going to take maybe once or twice attempts to get into the trade with a very tight stop loss and then ride it out. So I'm very curious to see what CPI will be bringing to us. But both of them, I'm looking for the long here, guys.
Let's see what happens. It's gonna happen in 7 minutes.
5 minutes.
5 minutes.
Oh, I
really love Jonathan couldn't come onto the live stream today, but he's texting all of us in the background. So he's obviously listening.
I really love GU actually more than EU right now. Because
why is that?
I trade volumes, right? So EU is kind of in the volume right now. Whether EU is already quite above it already, so it's kind of like EU is can still let me down. For example, if I would go long here, because we are literally in the volume. It's here. This is 15 minutes, right? If you go on 4-hour time frame, it's one of my zones where I was expecting the reversal, and it didn't exit it yet. So I had these 2 zones on the 4 hours where it's the first one here, right where we are right now. And only if we exit this zone, then on the pullback, I would take it long until there 03800. And until we are right here, it's not necessarily something I'm looking for. I really want to see it exiting the volume accumulation zone first. Now, 1 second. I'm gonna unthink this and go on 15 minutes so we can see both of them at the same time here. Now, this is 4 hours. Now, this is 15. It's right at the volume. The blue line is the maximum volume per week. So the past 3 days, basically, the only volume that was accumulated was right here.
That's and until control, yeah?
It's point of control. Yeah, this bold line is a point of control itself on the weekly. The thin line is a dynamic one, which moves with liquidity. So we can see the majority of liquidity moved from 02440 to 03275 recently. And as much as as long as the price is at the volume, it essentially can go anywhere right now. Whereas if you look at the GU, for example, GU is definitely above it. If you took a look at this volume right here, the price was above it, and we recently also accumulated more here. And the point of control is below it as well, so it's active.
It's a nice setup long, that is, because I can see you've got the point of control further up as well in that prior consolidation, a little bit above. Yeah. And that coincides really with that 200 EMA as well that I have.
Yeah, as much as moves from one big volume to another big volume area, that's basically what I want. And we kind of have one below it, which is perfectly been rejected now. And the next one is only where you have 200 EMA as well. So.
Solid. What would be an entry trigger for you, Anastasiia?
If it wouldn't be CPI, it would be right now, because I don't necessarily it might not give a pullback, but because it's CPI, I would wait through the CPI. I would rather miss the trade than lose a trade. So I would rather wait for it and see if what it does. Preferably a little lower where we were here around 22,200. But again, CPI can mess it up slightly, right? So I would wait.
1 minute to the news. 1 minute and about 40 seconds. Anastasia, we saw on your I think it was on I don't know which period it was, but we saw you're waiting for, you consider this a retrace for a continuation down. You had those curved arrows on, I think on the, there you go, on the that's on the H4 H4.
Yeah.
What would make you consider that this is a reversal or not? Because that's the question everyone is asking as a trader right now. Is this the beginning of a reversal, or is this, are we going to go much further, or is it just a retrace, right? It's the $1 million question all the time. When market has gone one way, we want to know, is it going to reverse or not?
I'm trying to see it a little from the different perspective. As long as the price is below my major volume zones, I'm mainly short, right? So my priority is still short, because if you look at it from the last move to the downside, we have this huge volume accumulation at 0.4050, and then we have 0.4940. So only if the price would actually break through this and end up above it, then long term I would shift from short to long. But as long as we stay below it, long term for me it's still short. So anything that I take long, I would take very carefully and only for a few pips. Whether it's everything that I take short, I would prefer to hold longer because I see the potential here. We also, if you look from the higher time frame, right, on the daily, the price was also accumulating here volume for a long time, and this is the first time we exited it since the beginning of 2023. Here we also had the volume before the
news is out. Yes, that's a huge candle. I'm sorry to interrupt you, Anastasia, but there's a huge, huge. Yes, I think it is huge because it's about 47 pips reaction from the market on the. Let's see. You are showing the dollar CAD.
I'm going to get that retest on pound. It's gone so far.
Oh yeah, no retest.
That sucks, man.
Wow, that's some huge reaction. Let's see what the numbers numbers are.
Literally, I think it just was a couple of points away from hitting that point of control. A couple of points to hit the 200. I still think it's going to hit the 200 EMA. I really don't know if we're going to get a good retest and continuation from this. So I think it's a gone trade.
No, well, it's too early to say, right? It's only a couple of it's a minute or so. Who knows? I think the market doesn't cease to surprise us. What we don't think could happen. I beg your pardon?
Bitcoin at 98, I think.
Yeah. Bitcoin. Let's look at Bitcoin.
Yeah, Bitcoin at 98. Shame the altcoins aren't doing anything.
Wow, that's this is the 1 minute on Bitcoin, and it's roaring. Wow, that's some nice movement there. That's a move of how much it was on that 1 minute candle. The whole candle was $12 on that move. Huge move, but not 12. I mean $1. I mean 1,200.
1,236.
Yeah. It's showing on the screen. Very nice move, but this is what you're saying. Actually, you're saying GU, right? GU, you think it's not going to come back? Why would you say that? Why would you think that this? Even though I agree with you, the impulse movement is strong and it held the first minute, the second minute, and it's still holding on the third minute. Why do you think we're not coming back for a retracement of any significance before we continue here on GU?
To be honest, GU looks actually now if it hits this 200 EMA, then I'm looking for shorts, really.
Yeah, me too. I'm actually looking for short now in a couple.
If it's done such a big impulse up into that area, it's the first time it's ever hitting the 200. It's the first time it's hitting the 200 EMA in this particular move. We're gonna get some kind of reaction, so I'm looking for picking up some small trades on that, I think.
Yeah, on the daily time frame, we are as well about 110% the normal average ATR, but it's of course CPI, so it's you can expect some kind of a bigger range than usual. So 110 is not out of the ordinary.
So I assume the numbers for the inflation was a little bit softer than they expected.
Yeah, it's 0.2, and they were expecting 0.3. That's on that's the core CPI,
and more than just 2 rate cuts. You never know.
Yeah, we are somewhere between 25 only and 75 basis points per year, right? So everyone is waiting for inflation to see what Fed is going to do. Now it's missing this point of control by literally like at 1.5 pip, I think. Did it reach your 200 EMA already, Alex?
No, it's just under it. It's just, but I've seen this the same thing just happened with EU yesterday. It played around underneath and then made a little bit of a high, retraced, and then just blew through it. So we'll see what happens. Let's see what's happening.
Someone is saying inflation is cooling. Well, I wouldn't say it's cooling, because if we look at the numbers, actually, it was barely slightly down compared to the huge rise that we had in 2024, actually. So cooling or more slowing down for the current moment being. Again, Trump is going to come, so we'll see how this is going to have an impact on inflation as well, with the new tariffs and the whole trade war that we're going to probably have with Europe as well.
Anastasiia, you mentioned Trump a number of times right now already today. What does the fact that Trump is coming on in less than a week, how is that going to change your trade plan going forward? And how should traders position themselves?
Well, first of all, is a smart thing for me personally to do is to see what Trump is going to be pushing in terms of which sectors of economy and all of this. And this is in terms if you want to invest in stocks, for example, long term, right? Or knowing what to expect from him, because this is going to be a period of time where a lot of things are going to change compared to the past 4 years. And I think it's a really good timing to be able to buy some things long term as well. For US dollar, I would probably expect the gain of inflation back, because however you turn it, the fact that he wants to, Trump wants to basically orient, the economy towards more exporting than importing, and to be able to produce more within the country as well. It's going to have the inflationary pressure, however we look at it, right? Especially in the beginning, because the country had huge imports, and now if they need to produce everything that they before were importing, that's going to create a massive demand, which is going to also boost the prices to the upside. So I would expect the gains in inflations as well over the next month for sure to come from the moment that he actually officially becomes president. Cryptos, definitely. I'm waiting still for the alt season. I'm just waiting first for the Ethereum to go up, because you know how it is. When the first Trump became a president, he was the first president who was just moving the money openly in between different sectors, from the stock market to the crypto market and back. So the money was just flowing in and out in the markets, right? To boosting all of this together. And after the Bitcoin is going to go up again now, then the second thing is Ethereum, when they start moving the money usually from Bitcoin to Ethereum. And after Ethereum takes a bigger part of capitalization in the market, then I'm expecting the alt season as well. So to see the altcoins going up. So this is my main focus.
Altcoins have been lagging really.
Yeah, they are.
Really hard. This last bull cycle, altcoins actually outperformed 100%. They outperformed Bitcoin. And now they're lagging really badly. And Ethereum is lagging behind Solana, in my opinion. Solana's absolutely killing it. And there you go. You got Doge and XRP that is risen from the dead. So interesting. But yeah, I think we're all waiting for alt season.
Yes, aren't we all?
They're setting it up right in the back. They're setting it up. He's putting the right people in places who are actually pro crypto as well. So it's lagging, but I think we can still see it happening very soon.
Yeah, what's the guy from the SEC? Gary something. I can't remember his last name, but everybody in crypto hates him. He's finally, leaving. So he's been super anti-crypto. Hopefully, we can get somebody in there that's going to be pro-crypto. Well, I think he's going to be pro-crypto and make, instead of Dubai being the hub for cryptocurrency, maybe it will be the US, and then we're laughing all the way to the bank. Hopefully.
Hopefully, indeed. Well, we have so far EU has held after the news quite nicely. Although now you can see that we are tracing a little bit back. We're creating on the 1 minute in any case. We're creating some sort of bearish structures. It's not a big thing. It's normal after such a move. So I'm not too concerned, although I'm not in a trade at the moment. But you can see, I wanted to show us this. You can see how the market goes exactly where we have those order blocks, right? And even with this is the H4 order block, right? It's very clean how we went straight there, right? We're talking about an area of only, this is the power of using order blocks in my mind. It's about 4.8 pips, and the market shoots up, goes there, and then has a total different price action. Well, not totally different, but it changes completely, significantly, right? The move was very one-sided. Once it hits that structure, it changes completely. It starts breaking and showing a bearish structure. It doesn't mean it's going to come all the way down yet. There's not enough information, but at least we have some on the 1 minute, some bearish order block being formed. So it means buyers are getting interested in this level, and sellers and buyers are perhaps taking profits. So the buying pressure is leveling out. But it's a very nice move, I must say.
Alex, what about the short on?
I beg your pardon?
Waiting for that. I'm waiting to see anything, to be honest. All I'm seeing is a massive big candle. It's not really any signal to get in at the moment. What about you? What are you looking at the moment?
Still GU waiting a little bit higher.
Yeah, I think so as well. I think these little, it's starting to curve a little bit, but it needs a little bit more of that. I think this little high here is going to get taken, and then hopefully we can see more of a curvature in the price action. And that kind of tiredness, that's when I'd like to look for a short, but at the moment it's just going up. So
I closed my USD CAD already, so now I'm waiting for the reversal on GU. So.
Where were you long from on USD CAD? Were you long from USD CAD?
No, I was short. I was short from yesterday.
Nice.
Before the CPI, I moved it in profit, and I was okay, whatever, it's going to be small profit or big profit. I closed it already because the GU reached my sell point. So I'm playing it safe a little bit. Initially, my target was lower, but if it breaks through, I can still retake it for a couple of extra pips. But for now, I'm going to be conservative about it.
Really nice trade. It's a really nice trade.
And EU is also getting closer to my second level, but actually EU still has some space to go. So I think GU also is going to slightly go higher still.
I think the early sellers in pound are going to get caught out soon, and then obviously after we get most of those out, I think then we'll see a little bit more of a move downwards, but we'll have to wait and see what happens.
Pound, I see pound getting to that order block, but it's to me it's not inviting enough to go short yet. I want to see more price action. That order block is not fresh in my book, and it's not part of a quasi. So I'm not too eager to go in. If I were to go in, that I wouldn't be part of my my trade plan. It will be something discretionary, which I don't typically do. So I'm waiting on the sideline. I do like, however, on pound, that order block on the 1 hour. I'll show you my screen and the reaction we're getting from that. This is what I mean. This order block on the H4 is, if we go to the H4 time frame, it's not a fresh order block. It's the first. It isn't unmitigated. So that could be a reason to look for a trade, a short, that is, because you can expect some kind of a reaction to that order block. However, it's not fresh and it's not part of a quasi, so I'm not too interested in it. But look at that, this reaction we have currently from the top, right, missing that order block by just maybe 2 pipettes or so. I think that's very nice to see, and that could be a reason for other people to start, if you start looking for perhaps more reasons to short this structure once it gets there, because of this reaction. It tells me that the market might have some kind of reaction from it. The reaction it's already having before reaching it, it tells me something that might happen once we actually tap into it, and we might see more selling pressure coming in. But I would be looking for in the lower time frame for a reversal pattern, of course, and we haven't even reached it yet, so it's not something that I'm currently looking to short yet, although it looks very compelling on the 5 minute.
Well, and there's me thinking we were going to do some trading in this session, but it doesn't look like it at this point.
Yeah.
Well, the thing is, we wait for the market to let us trade.
Yeah, no. How I'm like, it's like EU looks really good for a long for me personally, based on whatever I see, and GU is for the shorts, so they kind of exclude each other, and I'm probably gonna stay away from both of them. And
do you typically do that when you have EU and GU having opposing biases? Do you exclude trading both of them when that happens?
It depends, because now with CPI, it depends. For example, if there is nothing for US dollar which affects both of them, and it's something only for EU or GU, for euro or pound coming, then I'm gonna separate them because it's a different data for different countries. But if it's both for US dollar, which affects both of them, essentially the direction after the CPI is gonna be very similar. And if both of them are giving me the opposite information, then I prefer to just let it be for what it is.
Yeah, I understand you completely, and I agree. The thing is to make the distinction from where that move is coming. Is it from those currencies or the dollar? And in this case, of course, it is the dollar, because it's the dollar news that came out. Yeah, I'm completely agree with you on that.
Look, if it still hasn't, I still think there's a long potential. If it comes down, if pound keeps coming down for a little bit further, then I think there is potential to get into a long position up to that 200 EMA, because just about above that 200 EMA as well. If you have a look on the 4 hour, this whole leg, we haven't had any type of real retracement up until now, and that 50 fib line, that is literally just planted above these highs and above that 200 EMA. So I still think there's a lot of potential for a long here if it comes down into this this imbalance and into these levels right here. So could have a trade soon.
Yeah, EU definitely looks really good for a buy. So,
but would you buy it at current levels? Where would you be buying it?
EU? Yeah, at current, yes. I don't think we're gonna go any further. It's correcting itself already. Almost half of the move from CPI already corrected. Now it's pulling back up slightly.
Mm-hmm.
So, yeah, that's the current level. Looks really good.
Okay. Would you be putting your stop below the whole movement, or?
Yeah, just below this. I don't want it to go below, because if it goes, then it might as well just leave this as a whole week and start reversing, which is not what I want, which is basically the opposite. So if I would be going long, my stop loss, it's somewhere between around 0.2930. And my TP, I would be looking, I wouldn't be placing a TP, but I would be looking for it in the zone from 0.3800 to 0.4200. I would be looking for a pattern to confirm the reversal first. Because the thing is that I have my volume zone here, right? But it already rejected it before. So it already had the retest. So it might also reject further, and it's quite a big move. So if I would just place my TP around 0.3800 and it would go to 0.4200, I would cut myself short on 40 pips, which is quite a lot, you know?
I understand that, yeah. So you would be putting your could you repeat those numbers, the where you would be considering a TP if you were in a long on EU? You said 10380.
800, yeah.
Yeah.
0.3800 and 0.4200.
Okay, all right.
Is on here.
Which is the basically the last swing high on a higher time frame.
Yeah.
Yep. But it's not because of that. It's because of the volume,
No,
of course.
it's because of the volume, yeah.
Yeah, I understand that.
Objectively, it can go even higher, right? Because my next volume zone, which wasn't tested before, is 0.4850, 0.5. So it can go even further.
If to me, if it takes out 104.36.9 roughly, although I have the exact number, if it does take that out, even with a wick, to me, that's because that's the neckline on the daily time frame. So to me, when it breaks that, I'm gonna be at the daily time frame. I'm gonna be switching and waiting for price to come back in to get that swing trade out, maybe much higher later, either this week or next week, whenever that happens. But that's your point where you're the level that you mentioned, 0420 something, I think you mentioned the latter one. That's very close to where my neckline on the daily time frame is. If that is taken out, if the trade takes that hits that TP, to me it switches something structurally that we have a possible reversal pattern on the daily time frame forming. So that's very interesting, of course, because we are weekly and daily in a very important area, an entry order block on the quasi, right? And those moves, if we can catch just a little bit of those moves, a fraction of that could be hundreds of pips. So it's going to be
one, right. So if it touches this zone here, essentially,
yes, exactly, yes, that's that 104.37, 36 something it is. It's the high of that swing high. If it takes it out,
see this one, yeah.
Exactly. Yeah. If it takes it out, even with a wick, and I hope it does, that's gonna open up a whole door of opportunities because it tells me that the market is at least trying to make a reversal here.
Yeah.
On the lower time frame, it has a reverse, right? On the lower time frame, we can see momentum is bullish, etc. But on the daily, it's still not. It hasn't broken any structures yet. But if it takes that out, that's the first sign. Maybe not the only sign, but that's the first moment I start to think, okay, maybe we are in a daily reversal. And if that's so, where would I be entering? I would be looking for that entry order block to catch that huge, and because it's going to be a huge one. If you zoom out, the structure is amazingly large. It can go much.
You're talking about the daily, right? If you zoom out.
Yeah, I'm talking about the daily. Yes, not on the H4. Even it goes all the way through to the weekly, basically. So it's one of those big moves you don't want to miss out if it happens and offers us a valid entry, because that's the thing as well, right? The area where we are right now is, if you look to the left, well, not on the volume, the point of control on your volume profile tells me it's much higher. But the area where we are currently, if you look to the left, you see there is an engulfing. There you go. There, yeah. If you look to the left, there's an engulfing there, and to me, that's a sign, a mark, left by traders, historical data telling us that there might be a reaction here. And if we get now a break of structure on the daily, that's the alignment we need from the weekly and the daily, telling us that this might indeed might happen, meaning we might get a reversal from here. It's not happening yet. It hasn't broken the structure yet, but that's how I think. Like, if it happens, then it's going to change my my expectation or my opportunities that are coming up.
Yeah, I understand you. I think I'm a little more conservative on this one. I would only be taking longs after we break 0.6330. I mean, on the daily, right? So I would be waiting for the daily reversal only after we take this high off. But it makes sense. I see what you're talking about. 0.4370. Yeah.
Nice.
So are you considering long now until this level?
Actually, the thing is, we are coming from, if you go to the lower, actually the daily already, we're just looking at the last couple of bars. We have a very, very bullish pin bar. That tells me that there is, for a number of bars, bullish order flow coming up, right? Likely. And that creation of that order block tells me that, the easy path is going up for, at least a day, maybe two. So yes, I'm looking for that that long, but I don't have an area. It hasn't reached an area where it's interesting for me. For me, it would be on the H4 coming back to, let's say, around 02.99, that area, that where we basically where the last impulsive movement on the H4 started. If it gets there, either today or tomorrow, then I'm looking for that long. If that.
So you think it's still gonna have a pullback?
I don't know. I don't think.
You just want to see basically for your entry, preferably.
That's the entry that if and when it comes back. I don't have an opinion if it's going to come back or not right away. Maybe it's not. Maybe it's going to continue. But if it comes back, then I will be interested. And if it doesn't, I'm not expecting it to go any lower. Although, on the H4 on my structures, it's been contained very nicely within the range of where we started, the ignition of that impulse, and where the next opposing structure is. So I think, who knows? I need more data, but I think it could just hold this range going forward. The range of the H4 where we are currently for a couple of bars. What made you think? We saw you have a dollar CAD. You were talking about dollar CAD. How often do you trade the dollar CAD compared to euro dollar or GU?
Less, much less. About 90% of all my trades is EU, GU, and oil, and the rest is gold and USD CAD, and really rarely Swiss franc. So that's.
Yeah, that's exactly why I asked, because I remember you said that you trade EU and GU mostly, and I think I remember indeed oil. But why did you choose this time dollar CAD? Is there any specific reason?
It just looks so good. It just really looks very good. I have them opened. It's one of them. Like, I only trade majors. First of all, I never look at their minor currency pairs or anything. I have them open, but I only trade USD CAD and the Swiss franc only when I see a really good setup that aligns perfectly for me within everything. So yesterday was that specific point where, again, if we open USD CAD here, now I'm gonna clean this all up and turn this off so it's gonna be easier to explain. By the way, someone was asking about the indicator for volume. I'm using the PVP. It's a periodic volume profile. It's available on TradingView. I think you need a paid subscription for this. And I use them on 3 different time frames. So it's daily, it's weekly, and it's monthly, and it's automatically draws it for you. So what I was looking at yesterday was this consolidation here, and I was waiting until the price exits this consolidation, which for me, a consolidation is always a volume accumulation area. And the price exited it some time ago here, right? I was waiting for the correction back to the area of consolidation to see if the price can reject the volumes that was accumulated here. And now what we saw before is that the price went, it had difficulties rejecting, but right before the PPI, right, the day before, we had the huge move to the downside, which broke just from the price action even standpoint. We broke the previous low, we broke that low, which is just from the price action is already for me the start of the reversal. Now, if I look at the volume also, and I place it just on the whole move to the upside, from the moment the price started going up to actually the high that it reached, the majority of the volume will be also here. So the majority of the volume the price created was at the majority trade volume, the majority of the money basically that was invested in the market was from 43,915, 910, which is exactly my entry point, as you can see. So yesterday after the PPI, the price rejected higher, but I was already having the short bias. And the PPI was a little lower, and despite the price actually pulled back to the upside after the announcement, I was still expecting it to go down because it was cooling off compared to November data. So I had my price action break of the structure. I had my volumes, which the price broke below them, which is also the bearish sign. Then I had the PPI, which initially the data itself was short for US dollar. And the fact that it gave a pullback straight to my point of control was just pure luck. Because initially, if it wouldn't, I wouldn't have the entry point. It would just go down, on the PPI if it wouldn't go the opposite direction first. So I had my entry point right on the point of control where the price accumulated the volume the day before that. So.
But you were already in the trade, you said, right?
Yeah, I was in a trade right after the PPI.
Okay.
Right,
Nice.
like an hour later or so, half an hour, something like that.
Yes. Very interesting. I thought maybe the dollar CAD choice was because you had conflicting on EU and GU, and that's why you diverted to dollar CAD. But it wasn't because of that. It was just because dollar CAD was more interactive. Price action was more just attractive to you.
It's so clear. I didn't have, because sometimes it's about the percentage. You almost always have some kind of a choice that is going to go up or down. And in this, I didn't have any bias that is going to go along. It's both macro and price action and volumes, everything combined together. It gave me the clear picture. That's why it was a USD cut, not because a Euro or GBP USD.
Yeah, that's very nice. And why did you close that dollar CAD? Is it because it reached the other side of the volume area where you have it on your screen? Was it because of that area that it was reached?
It's more because of the CPI that GU reached the zone. I might have closed it a little earlier than I should have, but also because I have my volume zone here. So essentially, I had two zones where I was expecting the price to reverse. So it was the less conservative would be here, but the more conservative closure point for a profit would be here, because the price already rejected it. This is my volume node. 1 second. This is my volume node here also. So the price reached that, we had the rejection, and this is another one. So essentially from this zone here, the price also might reverse, especially if GU would still reverse from the 200 EMAs and from my volume, then USD cut will probably have a pullback. So I closed it just on the bottom of the candle after the CPI.
I see that. I see. You mentioned you took the more conservative TP. What makes you decide one way or the other? Because that's something every trader has, right? When we set our TPs, do we go for the first, right, the FTA, the first trouble area, whatever that may be for everyone? Do we go for the first target? Do we go for the more? Do we get more ambitious and we think it's going to go a little bit higher? What makes you think one way or the other?
It's about what is the reason for their move, and it's about also compare it always to their other currency pairs, since I only trade majors. So it's quite easy if the majority of my other majors are reaching the point where it can reverse. I'm likely to close another one as well just to be safe. But
I
if
like that.
majority of them still have the room to the next volume zone where I would take it to be, even if I'm not in the trade, just if I see that until the next volume there is still room, I'm likely to hold -1. And DXY helps too. You know, I'm also looking at the DXY and I see how much potential, how much room for DXY has for me. And then I can also apply it for any currency pair that I trade, EU, GU, you know, whatever is Canadian dollar or the Swiss franc, because I also see that if the DXY has the room to go until the next volumes where it can reverse, then most likely my currency pair, my trade is also going to go further.
Nice. I like that. I like that a lot.
You know, it's not 100% like anything in trading, but it helps me to determine. But the best thing to do is never look at it afterwards to not have regrets. You know, if I close the trade, I close it. I'm like, whatever happens now, I don't care. I closed it already. Because to not catch FOMO, to not catch emotions about it, I'm like, I don't care. You know, it's just, it took a lot of time for me, but I sincerely don't even look at it afterwards, just to not catch a FOMO effect that I closed it too early.
Yeah, exactly.
For doing that, I always look at the trade afterwards. Like I'm looking at this because I was actually long pound dollar from this morning, and I'm like looking at it, I was like, that sucks, you know, because I closed before news. I'm not risking the amount that I was risking. I'm not going to leave that on through inflation news, but that's yeah, looking after it, you're like, oh, that could have been a lot of money right there, you know. But
and do you never take partials? I mean, do you never like those parts?
My trading is the best when I actually don't do anything, when I just leave it alone and I don't play with it. As soon as I start playing with my positions, I'm always mismanaging and messing them up. My worst is probably playing around with trailing stops and trailing them into profit. I'm so bad at it because I always trail it too far and it comes and takes me out and then it goes in my way. So I'm just, you know, leaving it and not doing anything. Maybe in the future, playing around with some ways to actually optimize the strategy. But at the moment, I'm just really rubbish at doing that. So I'm not looking at it, to be honest.
Yeah, I think it's a wise thing not to, you know, to once you close the trade, at least for that moment, for that session, to not think about it anymore, because whatever that was done is already done, right? You can undo it. So
easy saying that though, but you know, you
know.
close it, you put your phone in your pocket, and then you like go and do something. You're like, oh, let me see what he's done, you know. And then you look at it and you're like, yeah, it's one of those things. But it's good that you got over that, Anastasiia. That is something I'm working on, definitely.
No, just notice that I catch losses afterwards because the FOMO starts and I'm like, okay, you know, there is still a little bit of pips. Let me get back into this trade for just a bit. And it always went against me, right? So I finally got done with just messing my own trading quiz this way. And I'm like, okay, I just don't care anymore, you know, whatever happened.
Yeah. The thing is also, you can never get out at the perfect place, right? There's always a better. Very rarely I can get out at the top tick, so to speak. Rarely that happens. The most of the time you're not going to catch that. So you're always going to leave something on the table. So looking for what you left.
Leaving money on the table or losing the trade. Because I can say honestly, for me, losing a trade is one thing, but it hurts me more leaving money on the table, truthfully, which is strange. I don't know if there's anybody else.
What hurts more is when I don't follow my plan, and that's what hurts me more, because losing can be just part of the plan, and losing money on the table can also be part of the plan. But not following the plan, that's going to hurt to me, because I failed myself. I didn't adhere to my plan, and I think that makes the difference between you know, looking for that what you left on the table. I did that a long time, and it doesn't help me get better. What helps me get better is following my plan and looking. Maybe if I think it happens too much, that I'm leaving too much on the table, that's an invitation for me to go back to my data and look for, is there another rule for my TP placement? Maybe I need to optimize it. Maybe the current market condition call for a different a TP placement. Maybe that's the thing that I need to do. But regretting on or missing out it's easy. I know it's very easy. I've done it for a long time, but it doesn't help me to get better.
It's quite interesting that different people have different kind of pain points and different kind of, like, for you, Victor, it's like you not doing everything towards your plan with the process hurts you, whereas me,
yes,
to be honest, I got rules and I break them every single day, and I'm happy with that. I'm good with breaking rules. But if I leave money on the table, that really hurts me, and I'm not good with that. But on losing a trade as well, it doesn't hurt me, and some other people it really hurts them. And then Anastasiia is different with her thing. So everybody has in trading. It's like people think there's this. They meet somebody and they're like, this works for this person. I'm gonna do what this person does. But it's like trading is just so individual, and it's quite interesting. It's fascinating to hear it from different people. But Alex the Rebel.
There is a book.
You rebel, Alex.
The Rebel, yeah.
There is a book called Best Wins.
Nope.
And actually, Tom, who's the author, is talking about what is better, losing them or leaving the money on the table, right? And there is the saying
that's a great.
You read that, right?
Yeah, because that's when I kind of looked at myself as well, and I was like, wow, that's definitely me. When you read something as well and you're like, God, that book is actually speaking to me right now. That was a little part in that book said the exact same thing. It really, that was me when he was writing that. I felt he was writing that for me pretty much. But
it's a really great book, and he's also saying there that we often hear you can't go broke taking profits. So he's basically saying in that book that you actually can go broke taking profits, because if you take two less profits, it means you're leaving so much money on the table that you will actually never get to the next point trading, right? So I think it's somewhere about the point. I love how Victor explained it, that if he leaves too much money on the table, then this is the invitation to actually review what you can do better. But for me, is that, if I got in the trade based on my strategy and I exited the trade like with USD cut because I actually see there is something that is potentially I can reverse, then I'm good with it. Then I'm not going to be, kicking myself for closing the trade too early and actually leaving a lot of money on the table, even if it goes further, because I had the reason to close it. But if I got the trade, sorry guys.
I thought that was in my room as well. I swear there's a dog in here.
Sorry guys. But if I'm actually entering the trade and breaking my own rules, and I shouldn't be entering the trade there initially, I have no point, and it's just because I'm afraid that I see something and I'm gonna let it be, and I'm gonna miss out on the profits, and then it bites me in the ass, and I basically lose money. Then I'm gonna feel bad.
Yeah.
Because I initially shouldn't be in that trade. I initially shouldn't be losing that, So, but if I enter the trade based on my strategy and I lose it, then I prefer this over not taking a trade at all, because then I'm leaving the opportunity that is clearly based on my trading system and not taking it because of the fear of losing, which is also not a good thing.
Mm-hmm. There's another thing that I think is worth mentioning. Price at any given, whether your a certain level gets hit or not, right? Whether it goes, let me put it this way. In trading, the distribution of our wins and losses is not completely random when you consider a large sample size, right? 20, 50, right? It's going to, if you have consistent rules, you're going to have a certain specific, certain kind of stats going forward. As long as you keep on having the same rules, they should have, within a certain margin, they should have the same results going forward. However, any given result of a setup is basically random. There's no way you can know in advance if this one is going, to your TP, or if it's going further or not. So focusing on just one trade, if it could go further, and if you could have gotten more profit out of it, is basically losing yourself in the randomness of things, right? Because it's not relevant. It's not relevant if one specific trade could have gone longer or not. What's important is, what does the average do? Does the average, when you consider 20, 50 trades, similar trades, do they actually reach further down? Because if they do, then your TP should be further down. But and hopefully your TP is at the place where your data tells you that's where it's most likely to reach. And of course, that doesn't mean that there will be trades that's going to go further. Yes, there will be trades. But this area is going to be hit majority of your setups, and that's what matters. And there's going to be a couple that's going to go further. You accept them. When you accept it, you want to have the optimal entry, not the maximum. Not entry, optimal TP, not the maximum TP, right? Because you want to have your win rate higher. You don't want to just, if you go for the maximum TP, you're gonna miss a lot of trades because not all of them is gonna hit that. So when we consider that, it's not about the one specific trade. It's about the average, and that's why, looking back at each trade is, it's not conducive for a good mindset, I think.
So if there was, let's say, if there was a tip that you would give now to a newer trader that, let's say, they've been in their first few months of looking at YouTube, looking at ICT, or doing all of this crazy stuff, what would your tip be for them? Victor or Anastasiia?
Victor, you go for it. I really love about the average. So.
Could you repeat the question again, Alex?
If you were going to give a tip, let's say you're going to give a tip to your younger brother, let's say who's just got into trading, what is the tip that you would give him? You can't say
in general. Well, I would say stick to the data. That's what I would say. Stick to the data. Don't go after flashy strategies, big names necessarily, but stick to the data. If the data supports one strategy, by all means follow that, but stick to the data, because that's the closest. The data to me is the evidence, right? We want to be making evidence-based decisions. So I want to stick to the evidence, and the closest thing we have for evidence is the data. To me, is stick to it. Build your database. When you have an idea, go to the data. What does the data tell you? Is this something that produces, on average, with a sample size, does it produce profit or not? If it doesn't, discard it. Doesn't matter if it's a sexy strategy, if it's a popular strategy, if it, who else on Instagram is supposedly earning thousands and millions on it. I don't care. If the data doesn't support it, I don't want it. I would say stick to the data. Yes.
Fair enough. Anastasiia?
I wish someone would tell me this in the beginning. I only got it myself years after I've already been in the market, that you actually need to rely on the pure data and clean out all the stuff that doesn't work. Not everything that looks good actually makes good profits in the end of the day. And that's actually perfectly also separate for everyone. It's something individual because we all see the market slightly different. But data in the end of the day is everything that we need, right? And so many traders' problems can be just solved by backtesting. Just checking stop loss and take profit, the perfect placement by the average can solve so many issues for people. Yeah. It's just because they think they have a lot of unanswered questions. And people, when getting in the trade, they don't know ahead of time, when am I going to take profits, or what am I going to do if the trade slightly goes against me? What am I going to do if it's consolidating in my entry? When am I going to move my stop loss to break even? When am I going to move my stop loss into profit, and how much? It's because all of these unanswered questions we have. Then because all of those, we make emotional decisions in the end. Because once the trade is running, our brain will find all the excuses to keep it, to just not accept that it's a loss and we were wrong. So this is why people keep having the trades that are running against them, removing stop losses and all of this kind of things. But it's just the pure data that shows you that this doesn't work, on the paper can help a lot. Because also this is the trap that we have, as traders, as our mindset. You can have 9 out of 10 trades as a loss because of one simple thing. For example, let's say I had a person who came and showed a trading plan, and he was trading like some other things, and among them gold. 9 out of 10 trades on gold were losing, but 1 out of 10 was winning. And until you show it on paper, your brain basically says, well, sometimes we win, so let's try again, it's worth it. But until you see it on the paper that 9 out of 10 is actually a loss, we a lot of the times we just can't accept it, and we keep fighting it, although there's no point in it. It just needs to be cleaned out completely of the trading plan.
Yes, I think you're so right. What you just mentioned. I completely agree with. I was saying I like what you said. That 99%. Did you say 99% of traders' problems is solved by doing backtesting? Did you say 99 or was it most?
I said most, but
okay, most. Okay, I didn't want to misquote you, but yes, I totally agree with that because what do we know, right? Our confidence, I think, our confidence comes from things we know, right? When you have a conviction, when you know something, you can say, well, I don't care. I can feel calm because I'm in the trade. I don't care if it goes, a little bit up or down or does this or that, because I have knowledge that, this trade based on the data is going to do this, this is going to do this move so many times out of so many times, right? So what percentage of the probabilities are that's going to hit my TP? But you can only have that confidence and calmness when you have the data. If you don't have the data, you're going to be self-doubting and seeing everything you just mentioned. You're going to be, looking for reasons to get out and get scared because, there was a little spike here or there or whatever candlestick combination comes your way. But the cause is you don't have the knowledge, right? You don't have the data, the evidence that tells you what is supposed to happen. What are your probabilities? You're basically walking blind. And I think that solves a lot of problems for traders. They get anxious, they self-doubt, they make mistakes and they deviate from perhaps their plan, but it is because they don't have the knowledge or the data to back them up. To me, the data gives me confidence, right? If you have data telling you that if you do A, B, C, and D, right, you will have in 20 trades, you're going to end up. Why do I care if number 1, number 2, and number 3 goes losses? I don't care. I need to wait and see at number 20, is it according to what the data tells me? And if I did everything right, it should be. And 20 is just a number that I chose. But basically, when you focus on those, when you have that data, it gives you confidence. Because I said, well, I know what's going to happen if I get 50 trades in, 100 trades in. I'm going to be roughly around here, based on the data that I have. So it takes away a big portion of the anxiousness, and you can just relax and just execute. You're just following the orders of your trade plan. My boss is my trade plan, and I just follow the instructions. That kind of mentality I'm referring to. I like what you said.
The biggest thing though, the data, everything. I 100% agree, yeah. But the biggest thing, especially with newer traders, is just the expectations. Just the expectations when you're first coming into trading and what you're actually trading for is the thing that is going to ultimately set you up for the next potential 1 to 2 years to the rest of your 5 years. My expectations when I got into trading was from trading altcoins in a bull market where everything, you could literally throw money at something and it would go up. And I expected that it was going to be like that all the time. Super high leverage, really exciting feelings. And that is the detriment to newer traders. And the thing is, when you've got that unrealistic expectation. You don't really care about the data because you're in there for the wrong things. You're in there for the money. You're in there for the fast thrills, and that's what happens. And I think that's something that needs to change, especially what we want to do in the 5ers is really make sure that everybody comes in here has a realistic expectations of how much time you have to put into the charts to even get that data. So how, it's tough, man. It's tough, but expectations, man, killer.
Yes.
Yeah, it's also, that about the disconnecting your self-value and self-worth out of the result of the trade.
Mm-hmm.
Because in the beginning, I remember how I felt, when the trades were going one after another bad. I felt like I'm completely stupid, this feeling like when you, like what am I even doing here, And I think data actually also helps in that.
Yeah.
Because you can see the statistics, you realize this is the strategy that I have, this is the system that I have, this is the statistics of the system. No matter how I'm going to turn it, if I do everything right, this is a statistic that I'm going to get, and some of them are going to go to loss. And that doesn't mean that I'm a bad trader. It doesn't mean that I'm doing something wrong. It's just the market and the probabilities of the market that are taking the place, So I think this is also what a lot of the beginner traders are facing. This connecting feeling of self-value towards actually the result of every single individual trade that they get.
Exactly.
100%.
Yes.
100%.
Yeah, I totally agree there. Yeah, expectation is a big thing. I think what is the expectation when new traders come to the market, to the industry? What is it? Likely they're gonna say they saw something on social media, Instagram or whatever, and they would or YouTube, and they would think, I can do this in a couple of months. I can leave my job, my 9 to 5, and I can be winning. I can be on a yacht. I can be on the beach, or even if it's not that outrageous, the only expectation that you're going to be winning or earning a lot of money in a short moment of time with, out of coming from zero is so unrealistic. But nobody tells us that when we come to the market. There's no one if anything, they're going to say, no, these are the potentials. It's unlimited. You will be, you decide how much you want to earn. Well, it's not exact. Yes, theoretically, but it's not exactly like that, because the limitations of what realistically is possible will decide that you will not be earning that much at the first few months, sometimes years. So it's not completely unlimited, but who's there to tell you, to bring you to more realistic levels? Nobody, unless you have perhaps a mentor, or perhaps if you are a subscriber to the 5ers Live Trading Show on YouTube, for example. But other than that, you're not gonna get the down to earth, realistic view of how things are, and you might be doing mistakes by having such a unrealistic expectation. Mistakes in how decisions you make, like for example, risking too much, thinking it's easy. It's not that easy.
Yeah, there's a big thing, especially in prop as well, when a lot of new people come in, because of the numbers of prop and because you're trading a big account, maybe when you haven't earned to trade a big account, the expectations is one of the biggest things. Also the leverage is super addictive if you're not used to using it. The high numbers, big fast numbers. One of the biggest things as well for myself was big numbers, looking at them, and then I couldn't get used to then trading small numbers after seeing such big positions. And that's also really big detriment to traders I see trading prop firms. They'll come in, they'll do really well, they'll be super dedicated to their plans when they're doing the evaluation. Soon as they get funded, that's it. Their expectation now, I've done it, I've got funded, now I'm going to make a lot of money. And that's when the leverage gets jumped up, and that's when they actually blow their accounts. So yeah, trading's not easy, huh?
No, it's not.
Yeah, that's one of the... Go ahead, Anastasiia.
And it's not easy, but it's fascinating. But I think if anyone is going to make it or break, leave it in trading, Are they going to stay or are they going to leave after a while is determined by the readiness to work with your mind, because it's tough to be able to accept that the reason that, like I'm losing is me and not anyone else, not the market, not the strategy, not anything else. And it's a lot of responsibility which a lot of people are not ready for. And I think that's the only reason why people live, or like majority of them, because everyone is smart enough to be able to learn a couple of things they don't hear about the technical analysis, right? And they are more than enough to be able to find profitable trades, but to be able to see the profitable opportunity and being able to work it out, and trade it and be disciplined, that's completely different in the end of the day.
A lot of people as well, I think, have decision fatigue as well. When they go through trading, they make those good trades and then they keep trying to trade to keep trying to make money. And that's also where they mess up a lot. So there's a lot of mental game with trading, which I think is the most important thing. So anybody that really wants to level up, start just working on that and read some of the, I know it's the most boringest thing to talk about. Some people find it fascinating. I find it fascinating. Other people think it is the most boring thing, talking about psychology and mindset in trading, but it's probably one of the most important things. So I definitely would
It's boring. It's much more fun. It's as boring as backtesting, right? Backtesting is boring.
I got to admit, I do not backtest. Yeah.
Who wants to, right? Who wants to sit here and backtest and press the numbers that never give you money? I mean, it's much more fascinating to press buy and sell buttons. But in the end of the day, if someone can't, if someone is struggling, this is literally the way to do it. People just don't want to spend time on it. But
yeah, backtesting is for a lot of people the same as reading a book, right? Nowadays, that's not popular anymore, right? Reading a book, we prefer to be, on the stream, something that comes passively to you instead of you reading a book. Backtesting, even though it's not popular, it's not enticing, it's not enjoyable at the first phase. When you realize, that's my opinion, when you realize the value that you get and how important it is for your profitability, you start valuing backtesting a lot more, and you start getting a weird way of enjoying it, even though it's boring because there's nothing happening. It's just you writing things down or following a plan. It's not exciting, but it can be something that you enjoy because you understand that this will help you become a better trader, because that's the goal, right? Watching that reward, I'm gonna have a bigger edge if I do this thing correctly, if I do it well, and making that connection to your reward, becoming a better trader, makes this this activity, although it's not enjoyable on itself, you're still going to have some kind of enjoyment because you're actually working towards your goal.
Yeah.
100%.
Lambos are crappy cars anyway. You need a Bugatti if you want to flex one piece. Do you know, I can't, you need a motorbike. Get a motorbike, get a nice, I don't know, Harley Davidson. That's a flex. Like a nice Harley Davidson. That's a really nice bike. The most successful trader I know that have 500 traders in backtest. Does anybody want to ask any kind of questions to Anastasiia? Because we kept her on quite a long time. I don't know. How much time have you got, Anastasiia? Because I know you...
Still a bit. It's okay.
Okay, fine.
All right.
We have
still,
time.
if anyone who wants a ask question to Anastasiia, this is the moment. You got your opportunity to pick her brain and know what she thinks about the different subjects related to trading.
Yeah, or you can just save money and buy a kayak. That is actually pretty cool.
Kayak?
Jeff says save money and buy a kayak. Yeah, man.
As a flex, you mean?
I guess, I don't know, buying a kayak, it depends where you live. Maybe in Europe it's probably quite good. In the Middle East it's probably not it's not going to help you too much.
But is Jeff saying just don't flex? Do something, fun,
Yeah, I
No
reckon
need to
Jeff. I reckon Jeff's just saying buy a kayak. Just get a kayak. That's the best thing to do. How long did you
There's one question here. Yeah.
Yeah, there are a couple of
Yep.
They're all coming in now.
There you are.
How long time did it take you to get profitable? It depends what you mean. Profitable consistently, profitable in terms of how much profitable. The first profits I got almost immediately, but they were not consistent. And then I got in the spine of obviously losses and everything. And then my first real profits when it started to become consistent were only after 2.5 years, actually, when I wasn't trading. And that was before volumes. So it took me even more time later on to change my trading system again, to completely recombine it back. And then it's formed something that I'm using up until today's day, and just adding up to this and learning and developing it. So it took me 2.5 years actually.
2.5. That's quite quick, I would say.
That's good. Yeah.
So, but that was the first when it started to become consistently, So, and then obviously it's a different thing. I think like a lot of people see it like this. Wait.
We have another one?
Also, I understand why people ask that question, but I want them to understand that it's not a good question. The reason why it's not a good question is because you're comparing where you're at now with where somebody else is. And it's the context is so different. You don't know where you are in your trading journey or even your style. And, for me, it took 5 years to get consistent profitability. Before that, I was just boom and bust all the time. So it's like everybody has their own process. There's some guys that I know that's taken 10 years to get profitable. Some people it's even quicker. So it's a bit of a tricky question to ask because it's really, really individual to a person.
Yeah, it's really individual. And also, this is kind of like an one-sided question in the sense that people see it like, they're unprofitable. And then something happens and they become profitable. And from their point on, it's only up. This is how a lot of people see it. But in reality, that's not the case. In reality, it's more like, well, at least for me, right? You guys can disagree, but it's like a little bit of success, then market gets real, and it's a lot of struggles, a lot of challenges, a lot of like losses and everything. Something happens and you become a little more profitable. Then again, a different challenges, right? It's just like in the market. Then you learn something else about yourself, about the market, about the strategy, about psychology. You fix one thing at a time. You come back somewhere to break even, right? You stay there at break even for a very long time as well, a little better, a little worse, right? And then it's again something you learn that pushes you forward. So it's never like one thing. I wouldn't say there is one point where you reach that you think, okay, I got it. I know it all. I completely follow my trading system always. I'm completely, like a perfect trader. I mean, it takes, I think, much longer than we actually estimate when we start trading initially. And it's always we learn something more and we become a little better, which doesn't mean still that it's a perfect point, because even to get to the different level of profits I find, it's a different skill sets that I've learned personally, even myself, even different psychological aspects, right? To be able to earn a couple of thousand and to be able to earn a couple of dozen thousands is a different mindset that you actually have. It's a different pressure, it's a different responsibility, which also is not one breakthrough point. It's a line, it's like a list of breakthrough points that happen along the time. And you become a little more profitable over the time, with years to pass. So that's how I would see it.
I think in other words, it's not a switch. You're profitable. You're not profitable, and you switch something, and suddenly you're profitable every day. It's a process that changes gradually through time and has ups and downs. Even after you reach profitability, doesn't mean necessarily you're gonna have consistency right away just because you have profitability.
I think it's the same with a lot of things, though. If you actually notice, with different things in our lives, we kind of oscillate from one range to another. It's like, let's say your bank account, let's say you're trying to save for something, and you've got this lower end of the range that if your bank gets to that amount of money, that's it. You're being really frugal. You're not going out. You're saving like all the money that you would put on going, like all of this stuff, and then it goes to the top end of that range, and now you're suddenly like, oh, you're kind of relaxed, and you start spending. You go out shopping, you go and get those Jimmy Choos, you go and do all of those different things, and then you just come all the way back down until you to the bottom of that range. And I think people just oscillate up and down. The same with your trading. Maybe you've got like these two areas where you keep oscillating your P&L until eventually you kind of get to the top of there and you're aware that you're at the top of that range, and then you try and break it through to the next range. I really believe that it happens in a lot of different things in our lives, and I think in trading it's the exact same.
Yeah, I think so too. Yeah.
I don't wear Jimmy Choos, Alex. I don't wear Jimmy Choos either. It's okay.
All right, so we have a couple of more questions. Let me set them up. Let's say we have.
I think for
one,
this.
Perhaps.
Okay, sorry.
Oh, go ahead.
I was just going to pull up the guy that said he's been struggling for 10 years, and this is totally fine. You've been trading for 10 years and you're still not profitable. This is fine as long as you're actually, like Victor has said, you're actually taking the things that you are doing and you're trying to understand what is not going wrong, because it can get really quickly into gambling and fast money and that feeling of going backwards and forwards. That's what you're enjoying eventually. That's what trading can become. If you're not looking into a journal, you're not actually tracking what's going on. Now, for somebody like you, honestly, reach out to us, send a message to Jonathan, and let's see if we can sort you out with somebody that can actually look through maybe your trading plan, look through the things that you're doing, and see if we can kind of help you. But 10 years is still okay as long as you're actually trying to progress and trying to see what's going wrong. Because you might be doing a lot of self-sabotaging as well. It's well known to be doing that.
I think the biggest problems of traders is that everyone knows what to do, but not a lot of people do it. I mean, if you say something, you gotta manage your risks properly. Like, they know it. You know, you say something, you gotta have the trading strategy. I mean, they know it. You know, it's not a lot of things that you can say that's going to be new to the person who has been there for a couple of years. True. But if they're still not profitable, it's because perhaps we are lying to ourselves somewhere, where we are trying to cheat ourselves, thinking that, okay, I'm not going to do it, and I still hope that it's going to work out, right?
Or there's a part of them that's actually kind of I'm not saying with this particular person, but actually trying to not succeed as well. Some people with self-sabotaging, maybe there's a part of them that likes to keep trying and not succeeding. And there's a lot of different emotional things that sometimes when you've got a lot of stuff kept up inside of you, that you put that onto the chart as well. So there's a lot of work that you've got to do if you want to be consistently profitable. And if you are struggling, you've got to do a lot of awareness and figure out maybe what some of the issues, some of the things that you're doing. Maybe you've got decision fatigue. Maybe you're self-sabotaging from over trading and revenge trading. There's probably reasons why you're actually doing that. And there's a interesting talk you could probably go into with somebody about that, but it's really important stuff.
Yeah, it's very. There are many things that can be the cause of someone who has been in the market, not in the market, but trying to get profitable and hasn't been able to reach that yet. And sometimes it's just the process. Sometimes you haven't done anything wrong, but it's just the process of, finding your edge, even though it may seem to a lot of people a long time, but there is no limit. There is no path that's going to say if you do this for 4 years or 3 years or 1 year, you will have 100% guarantee you will get there. There's no time limit. For one person, it may be a couple of a year. For some other, many more, and it's fine as long as it's the good process. And by the good process, I mean is you have an idea. Either you borrow it or you have it on you think it up yourself. You test it, right, and then you go. If you found an edge, you go execute it. And if that cycle doesn't bring you to profitability, you go back to step number 1. You go back and say, is the idea is the idea correct? And did I test it well? Did I execute it well? Right? So that cycle you just have to go to the first station again and see, maybe the idea isn't profitable. Maybe I didn't test it well.
I think I
didn't execute it well.
I think we got a nice short £1 finally. We'll see what happens right now.
You gonna pull up your chart? Yeah, I see it now.
Didn't need that 200 EMA, but that kind of like distribution type of price action, it's been going, we've been talking for 2 hours nearly, and it literally hasn't gone anywhere. So EMAs are starting to come together as well. We've got like a nice little gap. We've got the 50 EMA down here, 200 EMA, sorry. So I should put my stop above that. So that is the trade. Even though we haven't hit that 200 EMA, which is not ideal, but it's all gone quiet. Why has everybody gone quiet?
You're thinking the
don't let it go quiet. What's all this sudden anxiety coming into the room?
I'm sticking with my Europe loan that I'm looking at, so I'm gonna pass on that short.
There you go.
Yeah.
Let's see. Let's see.
There was a question about FIBA, actually, and I see you using it quite a lot, Alex.
Sorry?
There was a question. I was asking about the FIBA extension here. Yeah. So, more to your question, because I'm not using it at all, so I think you're going to be much better.
Yeah, it's just helping me go to a risk to reward ratio. That's it. So I get in at a 50 fib normally. Obviously, this is a little bit, got into the trade a little bit early, but all I'm looking at is getting into a 50 or a 618 fib, and then I'm looking to get out at a minus 50 fib, and that just helps me keep in mind that I don't have to constantly, work it all out. Where's my 2-to-1 risk to reward ratio? I've just got the fib that can just do it automatically. I'm just trying to make sure that most of my decisions, easy decisions, instead of having to think about them too much. The same with like working out position size, all of that stuff. I don't work my position size out to the absolute number, because for me that just wastes a little bit of time, especially when I do market orders, and it also wastes a lot of mental capacity for some reason. I don't know why. I'm just a person like that. The fibs are the same type of thing.
Basically, it's a shortcut for you to frame your trade, not necessarily your analysis.
Say that again.
Basically, the fib extension or the fib, the tool that you're using, it's not necessarily for the analysis, but more to place or to execute your frame your trade more efficiently.
The extension definitely, the extension not really, but the retracement definitely is part of the analysis, because I would look, let's say if on a 4 hour time frame, I would look for a retracement of this move into the 50. Let's say price is still down here, then I'm looking for buys anywhere around here up to that 50 mark. But even on a 5-minute time frame, for me to get into a trade, I'm also looking at moves to get into the trade using a 50 fib. So I'm always using the 50 fib. Like even for instance, a trade like this, we see that it's come down, break, retest consolidation along the 200 EMA. You know, to get into the trade simply, like have you seen anything more beautiful than that? You can't. Like, what is that? That is just, it's like, comes back into an area of demand on a 50 fib, hitting an EMA, and then, you know, bullissimo. So.
Indeed. I understand that. All right, so do we have any other question for Anastasiia? Let's see. This one. How did you come up with your strategy? And did you backtest it alone?
Did I backtest it alone? I mean, I did backtest it, of course, myself. No one did it for me. But in terms of finding the strategy, I've learned volume profile and the footprint from one of the traders, one of my mentors. And then I just went along with it and continued to find courses and education on volume profile and footprint charts as well. So in the end of the day, after a few years, I combined it in something on my own. Because again, you can learn the strategy from someone, but you will still need to adjust it slightly to your own vision of the market and however is comfortable for you to trade. But it took me years, to be quite honest with you, until I found something that actually made sense for me. I think the most important is to be able to find something that clicks and that you can clearly explain why do you find a trade there? Why do you enter there? Why do you exit? I mean, not just because my stochastic or my RSI, crosses there, but because I actually I understand what happened at that moment. And this was crucial for me. And this is why I started to trade with volumes and footprint, because it just clicked. It just made sense for me to see what actually the price, what is happening behind the price, what the market participants doing. And that it helped me also to determine what am I going to do in this, situation that the market is for me.
So. Yeah, that's very important. I think you mentioned something, the narrative, understand the narrative of the market. What is the market telling us while, it's printing out bars, and not necessarily only look at indicators if it's above or below or an EMA or, strictly the criteria of a strategy, but what is behind the movement, what is actually happening. Understanding that, to me too, is a game changer.
Yeah, it truly is, and you can explain it in different terms or different strategies that explain it in their own ways, but finding something that just clicks, I feel like it just gives you so much confidence, more, because you stop doubting. Okay, I see that, but I also see this. This is what happened to me in the beginning when I learned a lot of different price patterns and a whole bunch of indicators and strategies, and at some point it just starts messing with each other. You get opposite signals from different kind of things that you are using, and just clearing it up and finding only something that actually clicks in the head and makes sense. It gives so much confidence, just makes it so much easier as well to trade.
Yeah. Another question. This is a tricky one. Nexer is asking, does past data contain real edge? What do you think, Anastasiia?
Definitely. I think definitely. Because, obviously what happened in the past doesn't guarantee that it's going to happen in the future, right? It's just as simple as that, because it's ever changing. And because of this, it would be much more easy to become profitable trader if it would be identical. But to completely ignore the history and how it happened, that would be just foolish in my opinion. Because what I'm also referring to is essentially macroeconomics and the reason why certain things are happening. So if it happened in the past, it just has certain sequences that it follows, right? So if I'm going to completely go against it, I'm probably going to be in the wrong, because, that it just makes sense. This is just how the structure of economy works, right? And this is influencing the market afterwards. So the specific things, on the smaller time frames may differ, but in the big picture, it definitely has an edge to understand it. and also about the backtesting, right? If you look at the smaller time frames, for example, does it help? For me, it does, because if I only looking at the past, I can determine the right entries for me, entry models, exit models that actually made sense in the past. If I don't have that, what am I actually doing then? That I might be also just, like playing with a coin, and every time it flips, I can place a buy and a sell, and that's going to be my strategy if I'm not operating with any kind of data at all. But I also think that the personal judgment of a trader and being able also to determine, to have the visual memory that is developed after a couple years after your trading, this is just something super important. Because if it would be identical as in the past, if you wouldn't need the personal judgment, you could just easily, everyone write a code for trading, right? With a simple a couple of indicators that would be profitable. But for some reason, it's not that easy, right? It's because the personal judgment, my personal opinion, is just a key element in trading as well.
There's also, if something was super, super cheap in the past and you saw in the markets that people were buying, or there was a lot of buying at a certain area, and price goes back down to that area, you're telling me you're not going to buy something for cheap, knowing that it's been a higher price in the past? So those numbers, whole numbers, and big numbers, low numbers, you have to look at past data to see those things. You use it not just in this type of trading, like on a chart like this. You use that when you go to the supermarket. You use that when you go buy a car, or you use it when you go and buy pretty much anything in your head. If you went to somewhere and suddenly you saw it once a couple of months ago that it was one price and now it's another price, maybe that's going to entice you either to buy it or not buy it, depending on what has happened.
The same as something has been going up continuously, right? Like a US stock market, for example, for years. Well, I mean, it would be foolish to just think that it's going to suddenly collapse completely, right? Obviously, it had a periods like COVID and everything, but if we look at the bigger picture, it kept going up, especially the technological sector, right? Then it just makes sense. Obviously, it has certain edge to it, right? And then taking this data and applying it, we can figure out that the profitable trading strategies and systems for us and how we're going to use it in the future.
See, now if I was a little bit more patient, I could have probably got in at that 50 fib, and I would have been Gucci for another few $100.
Still beautiful.
For another 70.
Very beautiful.
70. Yeah, whatever.
A nice trade, by the way. Nice catch.
Really nice, yeah.
Yeah, past data. The thing is, as traders, as technical traders, that's what we do. We use past information to have an idea of our probability of what's going to happen next. So by definition, if any edge we have as technical traders, right? We're using the data from previous data, from past, even if it's a minute ago, a week ago, or a year ago. It doesn't matter. It's past data, and that's where we base our decisions on. So that's one thing. The other thing is that the market, the collective, the price action is actually the collective movement of the whole group, right? The collective group of how they think, where they have fear, pain, and greed. And that pattern is something that repeats itself all the time. And that is something, that's also past data. And that is something we can use. Actually, in individuals, you can say past behavior is the best predictor of future behavior, because the market also collectively also has a certain kind of behavior of a group, right? Group behavior. Its past behavior is also a good predictor of future behavior. It also applies to the group as a whole. And there's another thing that separate from behaviors, which is patterns. Patterns happen all the time. And that's what, and these are based on past data. So, and these patterns, and that's exactly our job. Our job is to identify patterns, either in price in price and time, or a combination of both of them, and act upon it, because we have a certain expectation, because we have past data telling us what's going to likely happen. So in many ways, my conclusion is, of course, there is edge in past data. That's the foundation of us as traders. But a very good, I thought the question was obvious, but we see that it's a good discussion starter nonetheless.
It really is. It really is.
Someone asking, how many strategies do you trade? More than one strategy, Anastasiia, or do you have a portfolio of? Or just
I have an investment portfolio, but that's something else, right? That's a long-term investment, which I'm not touching. But for the trading, for the daily trading, I have only one strategy that I'm following, and that's. But I have different entry models within this. Well, I wouldn't call it the strategy; I would call it the system, because I have different entry models, have different things that can trigger my entry, and different things that can trigger my exit. So within this one system, I have different things that I can do depending on the situation, but essentially follows the same narrative, basically the same logic throughout them.
So it's one strategy, but with some variation, how you execute it, how you approach the market with this, but it's one strategy basically.
Yeah.
Nice. That's good to know. Let's see. We're getting to the end of our stream, so let's see if we can fit one question more from the audience. Maybe this one from Sarki. Well, he says, when markets become unpredictable, but I'm not sure when that is exactly, but how do you adjust your risk management approach while maintaining confidence in your strategy? Do you have moments, would you say, that the market becomes unpredictable?
For sure. Like I have it, definitely. It's a period in the market when I just let it be for what it is. The thing is, it's also backtesting, right? If I backtest enough data, if I backtest, for example, the year or 2 or 3 years, I'm going to see that within my backtesting, there are periods of time when it went completely wrong for some time. It can be a month, it can be a month and a half. And as much as I have this data, it makes me more comfortable when this approaches, when this period actually happens. So it helps me to maintain my confidence that it is just a period of time. Besides this, going through this and actually seeing that afterwards the market comes back to, how I can understand it, and within my strategy gets back into the performing, that also helps me in my confidence. So it's a prolonged thing that I've got some experience with it. I see it's getting back to normal. When the next period of time like this happens, I feel more confident because I know it's going to pass anyway, right? And what I do, I can see it immediately. Like I can see it already in the beginning of the week, how the week is going to be, the first 2 days, market Monday and Tuesday. If they are completely going wrong for me, majority of the time it happens when the price is just consolidating. I just don't touch it for the rest of the week. I'm just really not touching it. But it took me a lot of time to be able to get to the point where I'm not constantly looking in the market, feeling pressure to take some trades. Just because the market is moving, right? So I can see it already in the beginning of the week. And if I have certain losses in a row, for example, in a day, in a week, this is also my breaking point, where I say, okay, that's stop, a big stop button for me, I think it's crucial to have limits towards your daily loss and towards your weekly loss as well. And in a prop firm space as well, as something that can save your account for much longer time. And then if you get in the role of, losing trades and revenge trading and trying to fight the market. Because I just had a conversation with someone yesterday about it. The good period of time always comes. The great trade always comes. The question is, are you still going to have your account and the money to trade when it comes?
True.
Because the most important is to not mess it up and not completely blow it when the back period starts.
That is, do you know how many times that I've been in a trade prematurely and just hit my amount that I want to lose on that day, and then I'm not trading anymore, and then in US comes and there's like the picture perfect setup, and I'm just like, can't do anything because you've already wasted your ammo, you know.
Definitely.
That is so well said, Anastasiia. So well said about keeping your account for when the time comes for that good period again. What it is, what we do in between those good trades that defines us as traders. So true. Alex, we see on the screen that your position is closed. Did it hit your TP?
It indeed did.
Ooh,
I think
nice.
it's going to come. I actually do think it's going to come down more, and I'm already looking at it like it's going to come down further. But,
you're looking at what you left on the table, or you think?
No, because I had another. I've just closed another position on a different account now, so I'm happy with both accounts. I'm not. I haven't got that much FOMO, to be honest.
All right, nice. Well done. That was a nice trade, by the way. I didn't see it coming that moved down on pound. Also, EU has made a very strong move from where we were. It consolidated after the move, after the impulsive move. It consolidated for quite a while, very strongly, very bullishly, but now broke that range and is heading down to some demand area. I would be interested when it gets much lower to the actual beginning of those that impulsive move, which is roughly where the EMAs are, right, all the way to the beginning before getting interested in it again. But a very good trade, Alex. Hats off to you.
If anybody wants to use those EMA, look again, I'm blowing my own horn again, but if you have a look at just the fibs, man, if I'm not going to convert everybody to fibs eventually, I don't know what I'm going to do. It is just literally the fib retracements are absolutely fantastic. So whack them on your chart, please.
Yep. All right. I think we have reached the end of our stream, and this is the last stream of our week. So I invite everyone watching us to join us again on Monday, where we will be coming back to you with more insight, more advice, more tips. And don't forget to hit the like button if you like the content, if you like our work, if you like Anastasiia, show her your love. Click that hit button, subscribe to our channel, because as you heard, we will have Anastasiia with us more often, weekly. She will be a regular on, she's joining our team as we are expanding. So you are all invited. Alex, Anastasiia, thank you for being here. Any last words?
Alex?
I don't know. No, you can go first.
I'm really happy to be here with you guys. Thank you so much. I'm really happy to see that people are winning as well. I saw some taking this do you trade with you, but I think even more people actually learned something. I hope so, and took something from today's live to be able to become a little bit better today after this stream as well. So guys, join us next week for sure on every single live. Don't miss out, because this is the place where you can actually learn something to push you forward in your trading career. The 5%ers actually are here to help you to become better traders, not just get funded, but actually keep it as well for a long time.
Yeah, we hope. There you go. We'll see you later, guys. I think, isn't this the last session for the week?
Yes, it is. It's Wednesday. So the next one will be Monday.
Well, there
all
you
right.
go.
On that note, thank you, Anastasiia and Alex, and everyone. See you guys next time. Bye-bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at The 5ers. We'll see you in the next one.